Hi, my name is Chris. I'm your life health exam coach. And if you haven't checked us out already on lifehealthexamcoach.com, check it out now. We have a great offer for you to help you pass your life and health insurance exam in 90 days or less, and we guarantee that. So we're here to help and support you on your journey to becoming a licensed life and health insurance agent. So today's topic, we're going to focus on whole life versus term insurance. This presents quite a lot of confusion for folks, both agents and consumers. So we're going to go over the basics of both here in today's video. Let's start out discussing what is whole life or permanent insurance. Most often this provides a level death benefit for the entire life of the insured. Then the policy does what we call maturing at age 100 or sometimes 120, depending on the policy. What that means is this policy is really designed to be there for a person's entire life. Now, there are a few lucky individuals who live to 100 or more. If that were to happen at the policy maturity date, they actually receive the death benefit themselves. Of course, that's not really why they get the policy, right? Permanent life insurance is there to make sure that there's a death benefit most often that you want to go to your beneficiaries that you name in the policy. So whole life or permanent insurance means just that. It is there for your whole life. It also has what are called living and death benefits. So what's a living benefit? Most often we talk about cash value. You can do a number of things with a cash value that builds in a whole life policy. For example, you can take out policy loans. You can, utilize that money. So permanent whole life insurance has this component of cash value, which we're going to explore a little bit more here in the next. You can see on the graph here in this slide that we have a whole life insurance policy. It's graphed out to show, in this case, a person, an individual got this policy at age 30. You can see on the top there that there's a face amount or death benefit of $100,000 in this policy. And then this particular policy matures at age 100. Now, along the way from that person and that person's lifespan from age 30 to 100, of course, they could pass at any time during that lifespan. And at any point, they would have this coverage. It's permanent insurance. Doesn't matter as long as they've kept paying their premiums, it will be there and it will pay that death benefit. And here you can also see, so there's two components that we mentioned, that death protection or the life insurance component, and then below that, you see a cash value that starts to grow the longer you have that policy. So at age 30, not much cash value there in those initial few years. Starts to grow over the life of the policy. And that becomes, one of the benefits of that whole life permanent insurance is having a cash value component. In other words, it's not just the insurance part that policy has that value that builds over time that you could access. So that's a nice benefit of whole life or permanent insurance and is what sets it apart. Now, term insurance, on the other hand, is life insurance that lasts for a specific amount of time. So it could be a term of anywhere from 1 up to 35 years that is a measured time span that's agreed on in that policy. So by definition, then it is not permanent. It's not going to last necessarily your whole life, right? Depending on what time you pass. And it's not guaranteed to be there for your whole life. It's guaranteed to be there for a specified number of years. So why would somebody want to limit how long their coverage lasts? That's the cost factor. You can get term insurance for a low cost, and that's why it's attractive to people. And I'll do a little cost comparison here in a moment, just so you get a kind of example of that. There's a lot of different coverage options for term, level term, decreasing, increasing term, and conversion renewal options. You can explore that further in my other video on just term insurance. And by the way, I also have a video on just whole life insurance as well. So got lots of different material for you to study at lifehealthexamcoach.com. So please check out our other videos as well. But let's go on and talk a little bit more about term insurance. Now, the most common form of term insurance is what's called level term insurance. It's life insurance that has the same face amount, same death benefit for the whole term of the policy. So from whatever age you get it, that's the issue age, until the end of that term. Again, be it 1 year, 10 years, 20 years, that specified number of years constitutes the term of that policy. And the example before, we said $100,000. I mean, maybe that's your death benefit, whatever it is that you choose. And then that death benefit will have a corresponding premium that also stays the same throughout that term with a level term policy. So you have a level death benefit, whatever time, if you were to pass during that uh, term, that number of years, the death benefit would be the same. It's whatever face amount that you choose when you sign up for the policy. So, just kind of summing up, just from a graph standpoint, recapping what we've talked about so far, when we think about the differences between permanent whole life versus term insurance, one of the big factors here is the fact that a permanent insurance whole life policy has that cash value that we mentioned, and that accrues over time. The longer you're in the policy, the larger amount of that cash value is. And a term policy, on the other hand, is pure insurance. It only has that death benefit. You can see in the graph there, there is no cash value that accrues. So it's for one purpose. Term insurance is one purpose only, to provide a death benefit. The permanent insurance has this other component of cash value. That's one of the biggest differences between permanent whole life and term insurance. I mentioned cost a moment ago. I just put this graph in here, give you an idea of what the average monthly premiums for $100,000 policy, so face amount of $100,000. If the person is to pass, that's what would go to their beneficiaries. You can see when you're age 25, you can get $100,000 of coverage for about $11 on a term policy, about $89 on a whole life policy. Again, why would somebody choose that whole life policy? Well, maybe they want to make sure it's there for their whole life. And also, maybe they find that cash value component attractive. But you're, in a sense, you're putting money into that, that goes into the cash value. Kind of why the costs are higher for a whole life policy. Also, the guarantee that it's going to be there for your whole life. Now, you can see as you get older with both kinds of policies, if you start the policy later in life, you're going to start out with a higher premium. And that premium, again, in both of these comparisons, if we're talking about a level term and a level, whole life policy, those premiums are going to stay fixed on the term policy for whatever that length of term that you've agreed to. And the whole life policy, that would be your premium, monthly premium, for the rest of your life. So that's one of the big differences, is just that cost. And it's why those products can be good depending on what you're using the insurance for. Now, another kind of cost by age of a term life insurance. Now, on this one, the face amount is actually $500,000 in a 20-year term. You can see when you start at age 30, if you only had that for, you can have that for 20 years. If you start at age 40, it goes up by twice as much. If you start at age 50, that 20-year term is going to cost you $117 a month. So again, term insurance is going to be at the, when you restart the next term, it's always going to be at a higher amount because you're older at that point, right? So that's how term works. At the end of that term, if you want more coverage at that point, you're going to pay that higher amount. And that's why, it can become more costly as you get older to have your coverage, in this form. But again, a person may not need $500,000 throughout their entire life, so you can adjust it. Just wanted to give you an idea, of, how cost changes as you age with term insurance. Let's kind of wrap a bit and look at, quick comparison overall. As we said, term is a temporary insurance policy with an expiration date. Whether that expiration date comes before or after the insured actually expires or passes away is the big if. And that's why, because it has that if in there, Not everybody wants to have just term insurance, especially if they're looking to make sure it's there when they pass, hopefully at a later age in life. However, term insurance can protect your family from a loss of income. It's a good idea until you raise the kids or paid off the mortgage. Again, especially when you're looking at those high dollar amounts. If I want like $500,000 worth of coverage, term is going to be the way to make that affordable. That may not be cost prohibitive for a whole life policy to cover that. And maybe I don't need $500,000 for my whole life. And that's where term comes into play. Lower payments to start off with. Again, lower premiums for those higher face amounts. Those premiums, as I said, they do increase with each renewal, and it has no cash value, right? It's there just for that death benefit and death benefit only. And that's one of the nice things about life insurance. The benefits do transfer to beneficiaries tax-free. That's true with both of these forms of life insurance. On the whole life side, it is long-term coverage for as long as you pay the premium. So it's guaranteed to be there for the whole life. So it ensures your burial costs and other final expenses are covered. Speaking of final expenses, whole life policies for final expenses are definitely a benefit because if you're trying to cover burial costs, you don't want that insurance to not be there when the insured passes away. So whole life for final expense is a very, very good idea. Now, it costs a little more, but has flexible payment arrangements. Also, the premiums don't rise as long as you're paying those consistently, and it has that cash value component we mentioned. And like term, like all life insurance, the benefits transfer to beneficiaries tax-free. All right, a few things to remember. And again, we want you to do well on your exam. So if there's any questions about term or you see, talk about a certain number of years that you're covered, that's going to be a term policy. So it's going to last for a certain period of time. Could be 1, 5, 10, 20, or 30 years. And then it stops. You can renew at that point, again, at a higher dollar amount. So any questions about that on the exam, you'll recognize, oh, that had a term of coverage. That's a term insurance policy. Permanent insurance, whole life insurance is there for your whole life. So any questions you have on the exam that talk about being there for their whole life, being there when the person dies, for sure, that's going to be permanent whole life insurance. Permanent whole life insurance is the only kind of insurance that has cash value. So again, if you have questions or you see something in a question where they're talking about cash value, you know that that's going to be some form of permanent insurance. Term offers only a death benefit and no cash value. So hey, that's what we covered today. I hope that's been helpful to you. Again, check out all our other material at lifehealthexamcoach.com, and we'll see you in the next video. Thank you.